trading tips today. We're not here to talk about which coins you should be investing in next month or over the next 6 months, or where you can make tons of money. Okay. Today, we're going to talk about getting involved in Bitcoins and cryptocurrency. We're going to try to give you some of the basics. Now, keep in mind, Bitcoin has not just been a trendsetter, but it ushered in a wave of cryptocurrencies built on a decentralized peer-to-peer network. It's become the de facto standard for cryptocurrencies. In fact, it's become a generic term. You know how we sometimes say Windex for glass cleaner or Kleenex for tissues? Well, basically today, people talk about Bitcoin, Bitcoin, Bitcoin. I'm looking at on the Bitcoin market. I mean, they're not really trading Bitcoin or getting involved. They're getting involved in cryptocurrencies or altcoins, but they just refer to everything as the Bitcoin market. I know it gets confusing because I say Bitcoin, Bitcoin, Bitcoin all the time, and I might be talking about Ethereum, or I might be talking about a group of new tokens, but we call it the Bitcoin market. Now, before we take a closer look at some of these alternatives to Bitcoin, let's step back and briefly examine what we mean by the terms like cryptocurrency and altcoin. So a cryptocurrency is a broadly defined term. It's virtually all virtual or digital money which takes the forms of tokens or coins. We can really break it down into two words, crypto and currencies. Currencies, we know what the word means, money. Crypto is short for cryptography. So it's any money that is done with cryptography. So while some cryptocurrencies have ventured into the physical world with credit cards and other projects, the large majority remain entirely intangible. In fact, a lot of them, and the major ones, aren't even involved in e-commerce type business. So the crypto and cryptocurrency refers to the complicated cryptography, which allows for a digital token to be generated, stored, transacted securely, and typically anonymously. Now, alongside this important crypto feature of these currencies is a common commitment to decentralization. Cryptocurrencies are typically developed as code by teams who build in mechanisms for issuance and other controls, which sometimes we can kind of generally refer to as mining. Cryptocurrencies are almost always designed to be free from government manipulation and control. Although, as they have grown more popular, this foundational aspect of the industry has come under fire. Now, as we know, many governments are trying to control. They're not really trying to control cryptocurrency. They're trying to control the movement of assets and the changing of assets without, number one, taxation, and without knowing who they belong to because of criminal activity. Now, governments need to be able to tax. So therefore, they need to be able to track assets. So what they're doing is, even though we don't have really regulations on cryptocurrency, they are making the platforms who either offer trading or exchanging use KYC, which is know your customer. And they're requiring identification and all of these other mechanisms. But this is only if you're going to be converting into fiat currency, real money. So you can anonymously move from my wallet to your wallet, some Bitcoins and some Ethereum, okay, with nobody knowing what you did. It's not until you use an exchange to try to move it into real money. So wallets are not under government disposition, and the identity of your wallets aren't given out. Now, the currencies modeled after Bitcoin are collectively called altcoins, and we have lots of them. In fact, today, I've seen two figures today alone. One that there's 1,600 coins, and one that claims there's over 2,000. And they've tried to present themselves as modified or improved versions of Bitcoin. While some of these currencies are easier to mine than Bitcoin is, there are trade-offs, including greater risk, brought on by they have lesser liquidity, acceptance, and value retention. Now, as us as investors, we want to always stay in an asset, whether we're trading stocks, whether we're trading bonds, whether we're trading currencies, things that are liquid, things that can be turned back into money. Because just because something goes up in value doesn't mean unless you can sell it, it has no value. So, you see and read all the time about these penny stocks. Okay. I bought 10,000 shares of this company for 1 penny a piece, and they went from 1 penny to $1, but you can't find a buyer for them. So on paper, they're worth a lot of money, but you can't find a buyer. So liquidity is a very, very important part of it, where you can sell. So therefore, we only look at the major currencies. And we'll talk about that or market capitalization shortly. But we'll examine some of the most important digital currencies other than Bitcoin. First, a caveat. It is impossible for a list like this to be entirely comprehensible. One reason for this is the fact that there are more than 1,600 cryptocurrencies in existence. And as of this writing, and many of these tokens or coins enjoy immense popularity among a dedicated, if small in some case, community of backers or investors. Many of them we've never even heard of. Beyond that, the field of cryptocurrencies is always expanding, and the next great digital token may be released tomorrow. For all anyone in the crypto market, the crypto community knows. Now, beyond that, the field of cryptocurrencies is always expanding, and the next great digital token may be released. While Bitcoin is widely seen as a pioneer in the world of cryptocurrency, analysts adopt many approaches for evaluating tokens other than Bitcoin. It's common, for instance, for analysts to attribute a great deal of importance to the ranking of coins relative to one to another in terms of market capitalization. And we factor that into all of our considerations. Now, you might have been thinking about crypto. Should you invest now? What are the fundamental principles that make a good crypto investor? So despite the sensational market swing headlines in the press, the reality is that a standard market typically only fluctuates by 1% to 2% on a daily basis. The average investor's portfolio rarely gets affected by such swings. Most personal investors think about the market in more long-term prospects. Now, there we have to slightly back you up because there's a difference between traders and investors. And there's many traders who are trading cryptocurrency in the form of CFDs. And CFDs are they're licensed and they're regulated and a very good way to trade. But in those cases, when you're trading CFDs, you're never taking delivery. You're not actually buying a coin. And most CFDs, they can be kept open for several days, but most traders close them within a day. And you can trade in Bitcoin against Ethereum. You can trade it against coins with almost no volatility, whatever the platform's offering you, because it's only based on the movement of the two coins that you're trading. But you're never taking ownership. So it's based on the relative value. And it's an interesting way. There's lots of profits to be made trading cryptocurrency CFDs. Now, the average investor's portfolio rarely gets affected by such swings. Most personal investors think about the market in long-term prospects. Now, to give you a comparison, on June 25th of 2019, Ether, which is abbreviated ETH, which most of us know as Ethereum, which is run on the Ethereum network, but the coin itself is Ether, was at $335.10. On July 16th, it was only worth $205.86. That was a 40% value drop in 21 days. Now, on February 7th, 2019, Bitcoin was worth $3,451, but on July 9th, it cost $12,649. Now, that's a 3.6 times growth in about 150 days. Because Bitcoin is the largest and it is the most dependable, it's the most mature. Now, it's not guaranteed that it's the best short-term investment. Investing in crypto requires a very different belief system. So crypto isn't an investment, it's a belief system. And that foundation will allow you to develop a new tolerance level for the very low lows and the potentially very high highs. So before you ever step into this marketplace, and I'm just giving you lots of odd and end pieces of information right there, you haven't even connected them. But you have to educate yourself first. You don't need to learn it all. But the first step before investing your treasure is to understand the broad outlines of the crypto world, its culture, the technology, and what it promises for the future, and of course, the risks. Now, if you stop to think, crypto isn't tied to a government. It's not tied to rules and laws of a country. It's not tied to the economy of a country. Crypto is based on a community. It's a social networking that the more people that are buying, the more people that are investing, the more people that believe in it, the higher the price goes. Okay. Now, when you come to the crypto markets, you need to pick your horses carefully. This space is filled with extremely optimistic people pitching coins that promise to revolutionize the world. And some might succeed. Many will fail. Now, there are still many scams out there, actively stealing from people with false claims and plans to exit with investors' funds. That said, there are many coins that are irrefutable, not scams, with massive development behind them and lots of credible people who believe in them. You've heard all in the news lately about Libra from Facebook. Well, you would trust a coin issued by Facebook. Okay. We know Bitcoin. Okay. Behind it, we know Ethereum. Okay. Because these are coins, we have Ripple. These are coins that aren't really about currency values. They're about building their network. Ripple is a whole set of network based on interbank transactions, and they're trying to sell their services to banks, which they're slowly but very successfully doing. Ethereum and the Ethereum Foundation is all about smart contracts, which are becoming more and more and more used. But smart contracts have to be traded with Ethereum or Ether. So therefore, it gives Ether a value. So lots of these coins, and you have to understand the coin and the methodology. And then, of course, as I mentioned earlier, there's market cap. Market capitalization is not just based on the value of a single coin. It's also affected by the total number of coins in circulation. And it's very important to understand because, like, for instance, Bitcoin, the most that will ever be released to the marketplace will be 21 million Bitcoins. Now, there's people come out with these new coins all the time, and all of a sudden their market capitalization is sky high because they're releasing, a billion coins. I think it was 445 million. No, it was dollars worth of Ethereum was just released. Okay, but they're a big, big coin. But you have to understand market capitalization. Now, only 21 million Bitcoins will ever be created. Period. It's, if you think of supply and demand, the supply is limited. That's what gives it value. And as we get closer and closer to this 21 million Bitcoins ever being issued, the price of Bitcoin will continue to go up because there won't be any more fresh ones to be had. It's like a government who's constantly printing money. So imagine going back one step farther to, or a lot of years back, to when gold and the US dollar were tied together. So for every US dollar issued, there was gold in the vault. That meant that those dollars were limited because they had to be tied to the gold on deposit at Fort Knox. That went away many, many years ago. So governments can just issue currency, but they're not tied to anything except a belief system. Now, the other thing is you don't want to have a currency where there's no control over the release. Because if you had one of a million and is worth $10, and then they decide to release a billion more, all of a sudden your market share goes down, your price of your asset goes down, it's not worth anything. So spend enough time learning the broader parameters so you don't make a rookie mistake. Now, on CoinLib, you can see all of this easily. When you log in, you'll see all the coins. You can see the current prices. You can pick where the prices are coming from, what data feed. Okay, you can see the current price, and you can see the current market capitalization. You can also see the volume. Volume is very, very important. Coins that have very low volume are like coins that have very small market cap. When they have low volume, it means that there's nobody trading them. So it may go up in value, but if nobody's trading them because there's no volume out there, you can't sell yours. You have to beg for a buyer. Okay. You can see also the last 24 hours on charts and graphs. If you want to trade, just click on the trade button. It'll take you over to your platform. If you want to get live signals, just click on the signal and it'll do all the ranking based on the technical analysis. You can star and pick which coins you want to mark. You can put whatever coins you want to put in your portfolio and place them in your portfolio based on what you own and track your portfolio without dealing with a broker, and you might have coins in different wallets and different exchange and everything. You can put you're not moving your coins. You can just keep track of them all right here and see what all the values are because you set up your portfolio that's everything you own regardless of where you own it. You're not changing anything. You're not giving access to coin. You're just setting it all up, and that way at an instant glance you can see everything. So let's go on with, should you invest in Bitcoin or cryptocurrencies? Now, over the years, Bitcoin has performed strongly with significant returns and continued customer adoption. Of all the currencies worldwide, Bitcoin yielded greater returns than any of the five of the previous 6 years. In 2011, Bitcoin made 1,500% profit. 2012, 299. 2013 was 5,400%. Okay. 2014, it didn't do so good. The dollar outperformed Bitcoin. 2015, we saw a 37% increase. In 2016, 130. Now, granted, when you read about Bitcoin in 2011, that was probably the year, and I can't go back that far to remember, it was probably the year it went from $30 to $100 or whatever, $450. As it's becoming more and more popular, it's not making that 5,000% return. It's maturing, it's fitting into the market. It's still making very, very, very good returns. But also, there's a big difference when something's trading at $22 and it goes up 100%, and something is trading at 7,000 and goes up 100%. You know, now that what's happening is it's getting more absorbed in the markets. In 2011, virtually nobody heard about Bitcoin. No, maybe hipsters did. Your grandparents didn't. Your neighbors didn't. Now, today, grandparents at Christmas time run out and buy Bitcoins online to give to their grandkids so they can be hip grandparents. Now, these are outstanding payouts over a 5-year stretch for any asset, stocks, bonds, derivatives, or currency. With Bitcoin soaring again, the underlying computer network is stronger and more secure than ever, and a multitude of reliable, user-friendly wallet services, application resources are rising. It is time for investors to take a more serious look at investing in Bitcoin. But you have to understand, you need to be able to buy and sell on exchange. You store your cryptocurrency in wallets, okay? And you need to understand what all of these are. And you need to understand that you're not getting involved in a scam or a rip-off wallet or one that doesn't have the high security. And this is where CoinLib can help you out also, because they will give you the reviews on all the exchanges. They'll give you the reviews on all the wallets. They'll help you find the best ones, where your funds will be secure. Because A wallet is like your bank account. It's where you put your money to be safe. It's not where you're putting your money to trade. It's your savings account. Your checking account is a little bit less secure because people have access to it and can move money around. Okay, that's your exchange. So you have your savings account where your money is put away, or you think of it as your safe deposit box. Now, granted, volatility is still in the market. Cryptocurrencies fall farther than you can imagine, and then they shoot up in price just as fast. It's like you are living in a dream. If this weren't enough, security is critically important. Hacks happen. Thankfully, if you follow best practices, which can be easily found on dozens of respected sites like CoinLib, you are okay. But let's face it, it's a little scary to know that you are responsible for your own coins if you choose to keep them yourself. Always choose to keep them yourself. Over time, as custody solutions mature, bigger institutions and more retail investors add this emerging asset to their portfolios, the volatility and the danger of holding cryptocurrencies will lessen. But ultimately, crypto might still be too much for you, and every trader will have to figure out if it's right for him or themselves. So do I believe in Bitcoin and cryptocurrency, and do I believe they'll skyrocket again? Well, I'm a firm believer that I think we're going to see Bitcoin steadily rise. Personally, I'm holding on my Bitcoin this year because I'm expecting, or several Bitcoin, because I'm expecting to go over 12,000. But this is my personal belief. Since its inception in 2010, Bitcoin was the first digital asset to beget an entire ecosystem of cryptocurrencies. For quite some time, it grew an underground following of investors who seemed very interested in the future as a physical possible replacement for the change in monetary system. As traditional institutional players curiously watched its development. While we were still likely many years away from a complete transition, the crypto space has been a volatile playground. During the ascension and adoption of crypto, many people launched ICOs, individual coin offerings, akin to offering a new stock without any supervision or regulation. During this time, Bitcoin led the charge to a valuation of nearly $20,000 per coin in 2017. That made all the headlines. Now, these ICOs, had nothing to do with Bitcoin. But you saw ICOs, they were making the headline paper, whether they were scams, people claiming to get rich overnight, people claiming all of this stuff. And then all the governments trying to back them down. What it did is it brought the awareness of cryptocurrencies to a larger marketplace that brought more people into the cryptocurrency sphere. Well, where did they go? They go start buying Bitcoin. Now, Bitcoin's based on supply and demand. As your market participants grow bigger, and even though grandma is only buying 1/10 of a coin to put away, a million grandmas buying 1/10 of a coin means 100,000 coins are being eaten up. Okay, when Bitcoin soared to $20,000 in 2017, that was in all the newspapers. Everybody was talking about it. Now, of course, it declined. Went 15, 12, 10, 7, 8. It went down to 35 and 4, but now it's holding pretty steady around 7,000. Okay, it's a pretty reliable number. Now, I'm not saying invest in Bitcoin. I'm not telling you to do anything. In fact, I'm going to recommend diversifying your risk when investing in Bitcoins and cryptocurrencies. Ether can be a good investment. Ripple, Merino, many of the leading coins can be good investments, but you have to understand what they are, what their pricing is today, where they might go. Do you want to buy a Merino, or do you want to buy a Ripple today, which is like 19 cents, when you could have bought it really at 17 cents? You waited till next week because it's trading at the top of its market, but it's really not. You have to understand it might have been trading at 30 cents a couple months ago. Where is its market? It's just like anything else. I say I want to buy Google shares. Well, first you have to figure out what price you're willing to pay for the shares and what's a good price, not what the market's offering today, because Google could have shared up this morning because they said something. So you're buying at the top. So, okay. So in today's instant gratification, microwave result society, many people are looking again to time the crypto market and win big, almost with a win the lottery type mentality. It's not the way to go. Now, with our mobile app, we let you invest in cryptocurrencies or digital assets like Warren Buffett wants you to invest in stocks through the S&P 500. With our app, you can monitor all of these and be ready to trade on your platform when these things happen. Warren Buffett, Ray Dalio, and even Tony Robbins in his new book, Money Masters, The Game, all recommend index investing. By investing in an index, the fees and the risks are much lower. It's tax optimized, and you can typically outperform the markets. No. Why not find an index on cryptocurrencies? Now, you always want to make sure you invest through regulated professionals. Regardless, it's not wise to ignorantly entrust your capital to any financial advisor, app, or cryptocurrency company without doing any of your own due diligence and research. After all, you're ultimately responsible for the outcome of your decision. And this, again, is where CoinLib comes in and helps you, because they'll give you our VIP recommendations. They'll give you reviews on all of the competitors out there in the marketplace so that you can form a intelligent, educated opinion. Now, we have CoinLib reviews can help you find the right professional, the best platform or exchange, as well as a wallet to secure your coins. You can rely on CoinLib for straightforward, honest information. You'll find up-to-the-minute charts, volumes, volatility, and pricing. So, set up your portfolio on CoinLib, use one of our VIP brokers, and before you know it, you'll be making smart decisions. But remember, education, education, education. So thank you very much for joining us tonight. Thank you for being part of the CoinLib family, and thank you for thinking about cryptocurrencies. Have a great day. Bye now.